I'm Greg Hunter. Welcome to USAWatchdog.com. With us, a bit of a regular guest. He is the founder and managing partner of Matterhorn Asset Management in Switzerland. He basically vaults gold for wealthy people in a couple of continents, including a big vault, secret vaults in Switzerland, I think in Asia as well. And I'm talking about Egon von Greyerz. Egon von Greyerz, thank you for joining us today on USAWatchdog.com.
Greg, it's a pleasure to be back.
You also have a big financial experience, central bank experience, and I don't know. I'm watching the news last week of the Fed announcement saying that she believes, this shows that we have confidence in the economy, we have a real rate hike going into a fantasy global economy. What say you about this rate hike?
Well, sadly, they had no choice because they had clearly indicated to the market that they were going to increase the rate. And I said last week at that, you know, if they really would like something to happen so they can really not have a rate increase, you know, some extraordinary event, but they didn't get that. And if they hadn't increased rates, it would have been absolute catastrophe for markets because there would have been no confidence in the Fed. But of course, there should be no confidence in the Fed anyway. I mean, they haven't got a clue what they're doing. Here they are increasing rates much too late. They're well behind the curve. All the important economic indicators in the U.S. are starting to turn down. You can look at anything from corporate sales, corporate profits, to retail sales, to Philly Fed, etc. And you know, the job market isn't anywhere near as good as they say it is, because the 5%, as we all know, 5% is when everybody who's looking for a job stops looking, and the real rate is over 20%. And of course, all the jobs that are created also are for over 55s or service jobs, no real jobs in manufacturing. No, the under 55s are losing jobs. So, and on top of that, you have bubbles everywhere. You have credit bubbles in the U.S., and you have new subprime problems, I'm sure, in the car market. You have subprime in the student loan market, etc. Plus massive debts everywhere. So, yeah, they're doing it at absolutely the wrong time, but that is typical for the Fed. You know, they always take these decisions when it's too late, and it would be a lot better if we didn't have central banks, Greg, because then the cycles would take their normal course. Rather than now being totally manipulated at the wrong time and in the wrong direction.
You know, one of the biggest indexes, the Baltic Dry Index, a story out just a couple of days before they raised rates. It says that it is at record lows since 1985. Couldn't the Fed, Michael Pinto says, hey, listen, I just had him on before you, and he says they're going to be forced to retreat and unwind this at some point in 2016. What say you? Is the economy clearly spinning into a conundrum, a recession/depression?
Well, of course it will do. I mean, the Baltic Dry Index is one indicator. You know, world trade is coming down dramatically. You know, the container traffic in the U.S. is down. A lot of freight indexes in the U.S. as well as in China are coming down. And emerging markets are collapsing. China is importing only a fraction of steel, for example. Their steel production is down dramatically, so they're importing less iron ore. And it just goes on and on. So, I mean, the Fed is totally out of sync with reality here. And you have, on the one hand, this is the world market. The U.S. is not an island unto itself, which is totally isolated from the rest of the world. You know, you have the ECB that actually increases the negative rate, i.e. goes from 0.2 to 0.3, because the economy there is absolutely awful. And it's the same in the U.S. But the sad thing is that the Fed has created a massive bubble. They should have increased rates a long time ago. So by manipulating markets, by not letting market forces taking their due course, we have now seen in the U.S. the most massive asset bubble ever in history. That wouldn't have happened if they hadn't kept rates at 0% for 7 years.
You're saying they should have let the out of this a long time ago and just had a real recession. You know, repudiated some debt, wrote off some debt. Some bankers would have been fired. and then we'd be on our way out of this. But instead, they kept it going way too long, and now they're trying to raise rates in a declining global economy.
Yeah, I mean, of course, there are different forces pulling here. On the one hand, there is nothing that justifies a rate increase at this point, except for the face-saving measure taken by the Fed because they had told the market this, and they didn't dare to do anything else. But these low rates, they don't benefit the economy. It's actually to the detriment of the economy. It only benefits the top one investors and speculators who can take the free money and play with it. The real economy, as we know, has 95 million people who are capable of working that are not working. We know the food stamps are almost 50 million, etc. So, and real GDP is coming down. So the real economy is not benefiting from this. But sadly, the Fed is looking at unemployment, and they're using their own measures for unemployment. Of course, Yellen is aware of that because she actually looks at the real figures also, but she loves the headline figures because that suits her. That it tells her that she's doing very well, the Fed is doing well to actually stimulate the economy, which is not the fact at all. So I think what will happen now is that this 0.25% will not last for very long. It will have to come down. And the interesting thing, I think, when the Q&A after the Fed announcement, Yellen indicated that, we raise it, if we raise it a bit, at least we can lower it again, she said, if we need to come down. So they're already prepared for that, because that she actually said. And also she said that we are studying now what's happening in Europe with the negative rates, and we are also studying what the effects of that will be. So they are aware that they have to come down.
So you think that she will not even get to the next rate hike? They're talking about on the dot plot getting to 1.4%. You're saying no. They're going to have to reverse this rate increase. You think sometime in early 16?
I think so. I think. I mean, if I look at markets, and of course, sometimes you've got to be more patient because than you would like to be, because all the signs you see are telling you that world economy, and this is world economy everywhere in the world, and world markets are all a bubble, and therefore we are at a point when anything could change the direction. And if you look at technical indicators, it looks like stock markets are just in the topping area now, and it might last for another few weeks or so, and a bit higher. But I think all the indicators are that we are going to get some shocks coming into 2016. So therefore, yes, I don't think that the increases that they're forecasting are going to happen, and I think it's more likely that they will lower rates. Now, but my view that I think currencies worldwide will continue to come down, and the dollar is overvalued, is going to come down. And of course, that will mean also that people will start selling bonds, because we know that the bond market is the biggest bubble in the world, not U.S. bonds only, but bonds worldwide. And I think, so you have on the one hand, central banks are going to try to lower rates or even into negative rates and print more money. On the other hand, you have the market that will realize one day that no one will ever be repaid in real money by governments who are issuing these government bonds at 0%.
And brings me to my next question. About gold. I mean, you're vaulting gold for very wealthy people. Obviously, you have a good enough business to have a secret vault in Switzerland and also in Asia. I don't know where else you have vaults. But you must be talking to very wealthy people. And are they buying the, oh my gosh, sell gold? I mean, gold was down last week at one point, 20, $30. What are they telling you about their fears or their strategy? Obviously, they're vaulting gold. So what are your very wealthy clients telling you about what they see coming down the pipe?
Right. Greg, we have, as you said, different vaults for different. For very wealthy, we have a vault in the Swiss Alps, which is absolutely unique and the biggest gold vault in Europe. And it's a James Bond-like experience. It's earthquake-proof, nuclear bomb-proof, gas attack-proof, etc. So that's for bigger clients, but we take clients from $250,000. But the interesting thing, I meet a lot of people who have big fortunes. And the majority of them, if you talk to, let's say, family office today, do not own gold, are not interested in gold, because they have made so much money on normal market, i.e. stock markets, private equity, direct investments. So they're not even thinking about wealth preservation or taking insurance against all the risks in the world. They have been spoiled. The wealthy have been spoiled by central banks manipulating markets, helping to make money that is not real money, and they're not doing anything to achieve these massive increases that they see in private equity investments, etc. There's no skill required. It's just a lot of money printing and zero interest rates. I think these people. So therefore, when you ask, we obviously the wealth preservation investors come to us. So we have a good business that we've seen increases in the last year, good increases. But in general, the wealthy do not own gold. I mean, there's less. Well, I think there's probably less than 0.5% now. That's still a lot of money. But the wealthy have not realized that what is going to hit them. Nor has normal people, of course. But I think there will be, as fear comes back into markets in the next few months, there will be, and gold comes on the front pages rather than the back pages. I think it may be changed.
And you say you don't realize what is going to hit them. What do you think is going to hit us all coming up in 2016? A lot of people think that the bonds are, will never get paid back, that they're going to get big haircuts, and if you don't get a big haircut, the money you're paid back in won't be much. What do you think is going to hit us?
Well, we're seeing the first indications of the bond market, the junk bond market. As we know, we had one fund or a couple of fund stock redemptions. Third Avenue was one. And junk bond rates, of course, now are up to 17%. I think we will have one disaster after the next in the bond market, first in the junk bond market, then in emerging market debts also. And then you will have new subprime markets, as I indicated before. I see the student loan and car loans as another massive area, problem area. So I think there'll be one thing after the other that will unravel. When you have a bubble, and when you have, since 2008, when the world almost went under, the world has printed or increased credit by 50%, by about $70 trillion. And that has really not, and the world economy is still struggling to survive. So I see that, and then of course I see the real change in confidence will come when markets come down. I think stock markets are now coming to an end of this rally. We have on a technical basis, we have this megaphone pattern that looks clear that it will end sometime in the next month or two. And I think we will see falls in stock market that will change confidence totally. And when you then have a fragile economy which is built on debt rather than on real growth and real investment, then I think things will come down very quickly.
When this unravels, do you think there'll be you say in the next couple of months it may start unraveling hard. But I tell you, if the Fed has to turn around and do an about face and cut that 1/4 point, that's going to be worse than them saying we're going to stand pat, isn't it? And couldn't that cause bank runs? Couldn't that cause a banking calamity? Couldn't that cause bail-ins, bank holidays? I mean, what you're talking about is going to happen in the next few months, you think?
Well, things take longer than you expect sometimes, but I think, yes, it will happen. Well, let's just say the first half of 2016. And you're absolutely right. I mean, I have said for quite some time, I do not think that the banking system will survive in its present form because the amount of debt outstanding will never be repaid, whether that's government debt, a sovereign debt, or whether it's private debt or corporate debt, plus the other areas we talked about, car loans, etc. Student. I don't think that will ever be repaid. Of course, they will start by bail-ins, and but that won't be sufficient because of the leverage of the system. Sadly, the depositors' money is not going to be sufficient. The other problem, what they're doing, of course, is to stop bank runs is now that they're stopping people taking out cash. Country after country now limiting the amount of cash. Many countries in Europe have between 1,000 and 5,000 euros maximum that you can take out. They're doing what they can, but that won't stop people anyway queuing in front of the banks. And I think that is something that we will see in the next year or so.
You think that this? I've had several different people make predictions on when this is going to unwind. Rob Kirby thinks that we'll have some real shocks before the end of the first quarter. David Stockman says before the election cycle ends, this is over. And he predicted that the Fed was going to be forced to raise rates. Well, they did. Catherine Austin Fitz thinks this will blow up in 2017. Charles Nenner, the great, former Goldman Sachs, the great cycle guy, thinks it'll be gone by 2017. That if you don't, that is be over. What's your time frame? Oh, there's a pretty good consensus going that this isn't going to be continuing. I don't know if it's a month, 2 months, 6 months, a year, but sometime in a fairly short window that this is going to unwind. And I don't think it'll unwind in one day. I think it'll be a succession. But what's your time frame of when this thing unwinds?
The thing is, once it starts, and this is not just the U.S. we're talking about. We're talking about the global level. We're talking about Japan, which is totally bankrupt. And will never be able to repay its loan. We're talking its loans. We're talking about China, which our credit has gone from 2 trillion to 30 trillion in this century. So it's country after country. So once it turns, it's going to happen very quickly. Now, when will the turn come? Because the turn will not only be in the credit markets, will also be in the stock market. So there'll be a total loss of confidence. Now, I'm happy to admit that I thought these things would have happened already. I have been premature, but you see, I look at risk, and to me, you've got to buy your fire insurance before the fire. We are likely to have a fire at some point in the near-term future, and so I'm looking at protecting yourself. So whether it happens tomorrow or the day after tomorrow is really irrelevant. Investors who don't take protection now are going to suffer dramatically. There'll be the most massive wealth destruction that the world has ever experienced.
Egon von Greyerz, Matterhorn Asset Management. You are the founder and managing partner, former big banker. Really appreciate you coming on today and giving us your appraisal of what's going on in the global economy. Egon von Greyerz, thank you for joining us today on USAWatchdog.com.
Greg, thank you very much, and it'll be very interesting to speak to you next year. I'm sure we'll have a lot to talk about again.
We'll have you on. No, you're one of our favorites here on USA Watchdog. A lot of the fans, I don't want to call them fans, the visitors, the viewers, the supporters of USA Watchdog like it, and you give a nice global perspective, and you have the banking and the gold perspective. Both you've been in both those worlds at high levels, including the world you're at now, which is Matterhorn Asset Management. Really appreciate you coming on again. Egon von Greyerz, thank you for joining us today on USAWatchdog.com.
Thank you very much, Greg. Thank you.